Let's take a look at that bourse. It's been a volatile week for the market. Overall, it's still a bear market for the NSE 20. As I said earlier, it's given up 50% of its 2010 gain. With this in mind, how do you expect the market to trade next week?
Very well. I think starting today, of course, we expect people to try and cash in on the Centum camp bonus status going ex-dividend, ex-bonus next week on Monday. Next week, we should be able to see continued focus on the blue chip companies. Then we also expect to see the continued seesaw motion of the index, with the investors trading cautiously because of what is happening at the operating environment.
Let's take a look at some of the active movers yesterday and what's playing out in the telecom space in Kenya. We had Safaricom with the most actively traded stock, closing at a 52-week low at 355. Investors and traders are saying that the stock is currently oversold. Would you agree?
Yes, I definitely agree. And just looking back, and what has brought us to this point is the price war that was triggered by the entrance of Airtel. If you look at the milestones that Airtel was looking to achieve, beginning with the first MTR reduction, then the number portability, followed by the second MTR reduction that was expected in July, but was postponed by the president. I think this is sort of giving investors confidence that that Safaricom is winning the war for customers, and with the M-Pesa and the 3G network already in place, I think investors they are saying now, the downside is limited, and the stock is trading at calm dividend. There's a very attractive dividend yield of 5.6% that should be lockable in the next 2 months. So I think we should continue seeing increased interest from investors.
With that being said, though, whilst you have low margins on the voice side, data side is really the new growth area. And Airtel Kenya coming out yesterday saying it's said to launch 3G in September. Safaricom is the only company at this stage that offers 3G in the country. Data, of course, as I said, is the new growth area. We saw that in Vodacom's numbers from South Africa yesterday. Is this a real threat to Safaricom's 92% share of the market?
I think it's still a threat, but it's much lesser a threat than what we were seeing 12 months ago, because what Safaricom has been able to prove is that it can protect its voice, and it's very, very difficult for the other players to play in the data space without penetrating the voice market. If you look at the M-Pesa is really a strong entry barrier for Safaricom, and the other players are definitely grappling with how do they enter this space. So in my view, I look at Safaricom as having a step or two ahead of competitors, because Safaricom is already talking about 4G. And the other players are talking about 3G network. Let's
move on to a stock that operates in the building materials space. Olympia Capital releasing a strong set of results yesterday, swinging to a net profit for the 12 months to February of 35.1 million shillings, and that's from a loss the previous year of just over 14 million shillings. The stock closed 15 cents higher at 435 shillings. Is this a buy given the strong turnaround story we've seen there?
I think what we're seeing here, Samantha, is probably the beginning of a turnaround story. But if I put on my investor's hat, then I'm looking at the ROE is still way below where I should expect it, 5%. It's below the cost of equity, and it's no wonder why you see the price to book is looking very, very attractive, but it's for a good reason.
I'll be speaking to Olympia Capital CEO later in the show. Is there anything that you would like to have raised with management?
Yes, most definitely. I think what I would want to see as an investor is more visibility from the management. I want them to engage me. I want to hear how is this the return to shareholders going to be beefed up? How is when is it expected to break even to at least meet the cost of equity? Because at the moment the price to book is 0.27 times of the book, and it's really that stock is really penalized.
Throwing forward to next week, we've got bank results starting to trickle through, expected to start trickling through for the second quarter. How are you aligning yourself in the banking space?
Banking space is going to be very interesting this time round because last year banks took advantage of low bond yields, and there was a very strong income coming from trading, coming in the form of trading income. So in terms of aligning myself this year, I'm looking at who was benefiting from this trading income, who is likely to match last year's, at least match last. Sorry? So
which company?
I'm looking at possibly KCB did not benefit much from last year's bond trading. Then they of course have they just got new capital, about $140 million towards the end of last year. I should expect that to show up their investment, their interest income.
Great, Pius. We'll have to leave it there for today. I'm sorry to interrupt you, but we'll delve more into the banking stocks as those results start coming through.